These are the 7 investment secrets that the ultra-wealthy use to build and protect their fortunes. I've interviewed some of the world's richest people, including members of the Forbes family, the Rothschilds, and the DuPont families, and I've studied the Goldman Sachs survey of ultra-wealthy families worth over $500 million. If you want to start thinking and investing like a billionaire, here's how they structure their portfolios. The first investment secret is that the world's richest families invest 28% of their overall net worth into the same stocks that you and I might own, but with a twist. According to a survey by Goldman Sachs of 166 families worth over $500 million, the world's richest families diversify their investments across 3 main criteria: size, type, and geographical diversification. In 1990, Harry Moskowitz won the Nobel Prize for proving that you could diversify your risk without decreasing your returns. We call this in finance the free lunch. To minimize risk, billionaires use 3 main diversification methods. They use large cap versus small caps, value versus growth, and geographic diversification. This keeps their portfolio stable and also primed for growth. And you could do this too by balancing your own portfolio across large cap stocks like the S&P 500 or small cap stocks like the Russell 3000. The next asset class that billionaires invest into is private equity, which makes up roughly 26% of their portfolios. Private equity consistently outperforms the public markets. If you want to build wealth, you need to know about this asset class that public stocks just simply cannot match. Billionaires love private equity, which includes investments in both small and large companies, as well as venture capital funds, funds that invest into startup companies. According to a report on private equity returns, private equity generated an average annual return of 11% from 2000 to 2023, which may not sound like much, but has outperformed public markets by 4.8% per year over the same exact time period. If you want to invest like a billionaire, consider including private equity and venture capital in your investment strategy. It's a way to tap into consistent long-term growth and also set your portfolio up for higher returns over time. Billionaires don't just play it risky. 10% of their net worth is actually in fixed income, creating a hidden safety net of predictable cash flows in order to cover lifestyle expenses. This is the secret behind how billionaires fund private jets, mansions, and their philanthropy without actually having to touch their high-risk growing assets. With fixed income, billionaires earn a steady 6% on bonds alone, providing the cash to cover private jets, second homes, or scholarships without having to dip into their risky and high-growth assets. Fixed income is the quiet engine of billionaires' portfolios, working behind the scenes in order to create stability in their portfolios. It's a necessary foundation for creating wealth. It's not just the safe option, it's also how they keep their empires running smoothly without having to sacrifice wealth and sell off valuable growth assets. Adding fixed income to your portfolio can both create a reliable income stream, allowing you to pursue high growth opportunities while also covering basic needs that are covered by these stable investments. The fourth investment secret of billionaires is real estate. On average, billionaires invest 9% of their net worth into real estate, strategically focusing on commercial and distressed properties rather than luxury homes. But if you're assuming high net worth families are investing in mansions or lavish estates, think again. Billionaires become billionaires by making very boring investments. Imagine an office building in a growing tech hub. Billionaires can purchase and lease it back to major corporations, which creates a great steady income stream while the property's value appreciates. Secret to billionaire real estate investments is called alpha, which is a term for a premium return they gain through insider knowledge or market influence. Many billionaires leverage alpha by using local insights and connections in order to increase the value of their real estate investments. If you're interested in real estate, consider looking beyond flashy properties. Instead, seek out commercial or undervalued properties in high potential areas where you can leverage local insights and market trends for long-term gains. The fifth investment secret actually surprised me. There's a common belief that billionaires invest a substantial amount of their wealth into hedge funds. However, on average, this is where the ultra-rich invest only 6% of their total net worth. Hedge funds aren't what you think they are. Billionaires use them for stability, not for exotic growth. In 2008, Warren Buffett famously bet that a simple S&P 500 index fund would outperform some of the best hedge funds in the world. And he was right. Yet billionaires still do invest in hedge funds today. But here's the twist. It's not about high returns. Hedge funds invest in everything from commodity futures to weather derivatives and other assets that do not follow stock market trends. Why do billionaires still allocate part of their wealth into hedge funds? Because they provide balance in unpredictable markets. Hedge funds offer what's called non-correlated or uncorrelated returns, which means they don't go up and down with the rest of the market. This adds stability to the portfolio of billionaires. If you're looking to reduce volatility in your investments, consider adding hedge funds or commodities or alternatives to your portfolio. This approach helps stabilize returns and also protects you during market downturns, which do happen quite a bit. Sixth, billionaires invest 3% of their net worth into private credit, where they see this kind of high return you won't find in traditional bonds. There's a hidden market that billionaires love. It's outside the traditional stock market and outside of banks, and it's delivering serious returns. Private credit has become a favorite for ultra-high net worth investors, reaching $1.7 trillion in 2023 alone. It's expected to grow to $3.5 trillion by 2028. As banks cut back on private loans to companies due to stricter regulations, wealthy investors have come in to fill that gap, earning high returns that traditional bonds cannot match. But why are billionaires so drawn to private credit? It's all about steady, high-yield returns. Private equity offers consistent returns without the volatility of the public markets, making it an attractive alternative to traditional bonds. If you're after reliable bonds beyond the stock market, look into private credit as a way to gain higher returns, especially if you're already investing in corporate or government bonds. Look at it as a way to diversify. The seventh and final secret is that billionaires keep surprisingly large cash reserves in order to be able to act quickly on opportunities that come to their desk. You might think billionaires always have their money tied up, but here's a secret. They keep a surprising amount stored in cash. In 2008, as the financial crisis hit, Warren Buffett's Berkshire Hathaway had billions of dollars in cash ready to go. When other investors were panicking, when there was blood on the street, Buffett invested heavily into Goldman Sachs, securing a 10% dividend and earning $3 billion within just a few years, all thanks to having cash on the sidelines. It might feel risky and even wasteful to hold on to so much cash, but allows the ultra-rich to leverage flexibility and timing. By having cash on hand, billionaires can seize on once-in-a-lifetime opportunities and leverage high treasury rates when they're available. If you want to think like a billionaire, consider maintaining a cash reserve as part of your strategy. Having liquidity lets you both capitalize on unexpected market dips and unique opportunities without having to sell other assets. And that is what you could learn from billionaires as it relates to your private investing and portfolio management. To learn more and hear my interviews with the world's leading investors, make sure you subscribe below.